I want to bring up this too, because this happened about 10 days ago, but it really didn't make much news. Civitas went ahead and dumped their CEO, Chris Doyle, in a little bit of kind of a Friday news release. Guys, Civitas Resources is a Denver-based oil and gas company. They're the brainchild of Kimridge and Bendel over there. They're the combination of Extraction and Crescent Peak Resources, who ended up rebranding and turning into Civitas. Chris Doyle has led them since May 2022 after taking over from the chairman of the board, Chris Dell, and basically oversaw a pretty strategic move away from their Colorado DJ assets into the Permian Basin via about 3 acquisitions worth about $7 billion. But over the past years, Stu, that company's stock has lost about half of its value, and it prompted at the end of last year for the CEO, Chris Doyle, or I should say former CEO, Chris Doyle, to launch about $100 million cost savings plan. But even those weren't enough to save his job. Interim or chairman of the board, what's his name here? It's something German. Walter Van Kempen, something like straight out of Hogan's Heroes here. We got Colonel Klink now leading Civitas. He used to be, I shouldn't make too much fun of him because he used to be the former CEO of DCP Midstream, basically through for about a decade, from December of 2012 all the way to December of 22. And before that was a VP, or was the president over at Duke Energy. So it's pretty interesting. He was also the lead director of Engine Number One, an activist firm that made, and this is the interesting part, he's the lead director of the board of Engine Number One. If you remember this, Stu, this is that activist investor firm that made waves in 2012 by getting 3 climate change focused candidates elected to the board of ExxonMobil. So very interesting to see who the selection was. Maybe a little bit of hand waving over there by Kimridge. Now, it was announced that he's only going to be temporary. They're going to launch a full CEO search. So Stu, I'm officially throwing your name into the hat to take over as CEO of Civitas. So we will see if we can make that happen. But I think it's very interesting, Stu. A lot of anecdotes coming out of Civitas from this. I've heard from multiple folks that I know that have been in and out of that company that it maybe wasn't let's just say, the nicest place to work. It was very top-down, authoritative. Obviously, when your stock gets cut in half after $7 billion of acquisitions over the last year, well, really over the last 3 years, but your stock over the last year has gotten pounded by over 50%. Obviously, something's going to happen. Again, we also saw EVP and CFO Mohat Singh of Expand get canned last week. So lots of changes going on in the management front. I think what this is showing is that the difficulty of maintaining growth from a public oil and gas standpoint, I think it's going to be really tough. And I think if you're the CEO of a publicly traded company, you've got to really be thinking hard about how you're going to continue to drive growth, because at the end of the day, the capital markets don't care if oil prices are down. They don't care if capital has dried up. What they want to show is year over year growth, but growth not just in oil production, growth in margins, growth in EBITDA, growth in things that actually mean you're generating more cash on a business than you were last year. And that's hard to do when prices go down and you've already, basically driven up your inventory or drilled up all of your inventory. So this is going to be very interesting. Civitas makes a move, probably long overdue, or relative to the fact that we've seen this depreciation of their quarterly earnings over the past probably 2 years, but really their stock price has really gotten hammered over the past year. So really interesting.